Hello, everybody. I'm going to share my portfolio for this week, my covered calls, and my cash covered puts. I'm selling weekly options, and I will show you how I track the trades and how I actually prepare the trades and how I evaluate the trades. So, the basic for me is this Google Sheet. I always log the trades that I do. I have here the open date when I open the trade and the tickers. And then what is important also, uh, I capture all the data, but uh, I look at the price that I get, the premium. I look at the fees as well, and I calculate, and this is important. I calculate um, what is percentage profit per year. If I did these such trades every week, what I would actually earn on such trade from my capital. And you can see that on some trades I'm getting 10% annual return, and on some trades I can get almost 100%. If I look at this week at the trades that I have, I my capital was $78,000, and the yearly return on premiums would be 45%. So this week I got $679 on premiums, and let's review what are the individual trades and how I did it. One one trade is of Nvidia. I sold call options for Nvidia. Strike price was 115 US dollars, and the premium was $33. This premium is per one stock, but the options are always sold in 100 lots, right? So actually you need to multiply the premium by 100, and if you deduce fees, you will see that I'm getting $31 a week on this option. I actually here I can change premium. I can change the number of or the name of the column, premium in US dollars. So that's but understandable, and it is per one stock. And that's the reason why it's negative is because I'm selling options. So the price for me is actually negative. Price of options slash premium price of option slash premium. So if it's negative, that it means that I'm getting money from selling options. I get premium. If I was buying options, it would cost me money, and it would positive here. But I'm focused mostly on selling options. I'm selling calls and puts, and um and uh, and I'm getting premium. So what I have in my portfolio are stocks that I want to keep for the long time. We can the stocks that I want to keep for the long time, um, and and I have also some speculative stocks, which I believe um, again 5 times or maybe 10 times. And yeah, that's the portfolio. I will be getting more stocks in the portfolio. But for now, I have what? I have 4 stocks. Um, Rivian is more speculative play. GameStop is speculative play as well. And Nvidia and Tesla, they are more stable stocks that I want to keep in my portfolio. Actually, I want to keep everything in my portfolio. Yeah, but these Nvidia and Tesla are more stable, and I own the stocks and sell covered calls. Um, for for Rivian, the premium was very good, so I was selling puts. And Yeah, getting nice premium. Let's have a look on 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 GameStop trades. I When I was selling the options, the price was around $23, and I was selling with the strike price $31. Because GameStop is quite volatile, and $31 is the minimum I want to sell this stock at, and so therefore the premium was quite low. It was only 5 cents per one stock. Overall, the return on my capital was 10% per year. For Nvidia, also the premium wasn't or annual return would not be so high. But we can have a look actually on this one, 30%. So on average, I target 30% return on my capital per year. And so for Rivian, I sold covered calls. Uh, I have um, I have 200 stocks, and I bought around 11 US dollars per one share, and I was comfortable this week selling Rivian for 14 US dollars. We can check actually where is it right now. So I bought, yeah, I bought somewhere here. So actually, almost at the bottom. And yeah, for this week, I'm comfortable with selling around 14. So yesterday, the price was getting really close. But today there was correction, so still there is a way to go to 14. And so I don't need to worry right now so much if the stock is going to be sold or not. I believe it will not. Um, then let's check what else we have here. 13, yeah, 96%. Actually, what I did with Tesla, that was quite nice. So I have 200 200 shares of Tesla, and I shared. Let me just go to Tesla. So this is Friday. This is Monday. Yeah, I planned the trades on Sunday, Monday morning, or when market opened. I sold covered calls, and the price of the stock was around 250. And so I didn't want to sell below 300 and 320. So what I did, I opened the covered calls for 300 strike price. There the the premium was relatively low, it was 13%. For 320, the premium was even less. It was only 3%. But as the stock was moving up, but only a little, I actually decided that I want to get more premium, and I rolled these options, and I rolled the options from 300 strike price. So I rolled it from 300 strike price to 285. And because of this rolling of options, it was still within the same week, but for lower strike price, I got additional premium, and my premium for this one was 500. I had to buy the this one, so actually it is closed. And then yeah, when I bought covered calls for 300 strike price, then I opened or sold covered calls for 285 strike price. It is possible that this week actually Tesla will reach 285, but we will see. I'm comfortable actually for selling for 285 as my uh, price when I bought the Tesla stocks was below 285. So I would be earning on the stock itself, but I would be also getting quite nice premium. Yeah, so that's it. That's it for the weeklies that I have, and I will end the stream. And tomorrow I will again review my portfolio, and I will update what I'm doing. If I'm rolling options, or I keep it as it is, and I'm just waiting for either expiring the options worthless or having them executed. All right. Thank you everyone for watching. And I stop screaming now. Screaming and streaming.